Hello everyone, welcome to Accounts with Krishna. You are now in chapter 2. We will be studying our clubs and societies. So, in our earlier classes, we studied how to prepare the financial statements of profit organizations, namely sole trading business, partnership business, and limited companies. In today's topic, we'll be studying how to prepare the financial statement of non-profit organizations. Now, non-profit organizations are those organizations which are established without the motive of earning profit. They are created for the promotion of arts, culture, games, and sports, finance, hospitals, schools, etc. So, different types of clubs, societies, hospitals, libraries, community-based schools, missionary organizations, etc. are examples of non-profit organizations. Here, as per syllabus, we shall only study about clubs and societies. So, like small cash-based business, clubs and society may or may not keep full set of double entry records. For the ease of reference, both clubs and societies are referred to in this chapter as clubs. Now the financial statements prepared by the clubs are your resident payment account. You have your resident payment account. Then you have your income and expenditure account and statement of financial position. So these are the three statements, or you can say the financial statements that we'll be preparing. Changes in terminology. There are certain changes out here, like for instance, income statement will be referred to as income and expenditure account. Profit will be referred to as surplus, or you can also say excess of income over expenditure. Loss will be referred to as deficit or excess of expenditure over income. Capital account will be referred to as accumulated fund. Cash book will be referred to as receipt and payment account. So these are the terms we'll be using here. So what is the main function of clubs? You can pause the video for some time and figure out which is the answer. So you have A, trade; B, provide facilities; C, have fun; D, provide an opportunity for people to meet and further their common interests. So let's have a look at the answer. What is the main function of clubs? Number A, trade. No, it's not the main function. Clubs are not established for the purpose of trading. Provide facility to members. Yes, it's to set up to provide facility to its members. Have fun. No, it's not. Provide an opportunity for people to meet and further their common interests. Yes, you are right. So the main function of a club and society is not to trade. Its existence is to provide facilities for members or to provide an opportunity for people to meet and further their common interests. So I think I can reiterate. So it's just simply talking about, the members of club not having knowledge of accounting or bookkeeping and showing the resident payment account as their final financial statement at the general meeting. So what are the problems that could arise due to it? So what's wrong with presenting the receipt and payment account only as a set of financial statements? So there are a number of problems. So if the resident payment account is shown as the final statement of financial statement, number one problem is it could not show the true financial position of the club. Number two, accrued expenses or prepayments made are not shown out there. When you talk about accrued expenses, it could be expenses payable, prepayment made in the early years, not shown in the receipt and payment. The assets of a club, the asset base of a club. So how much asset do we have? How much asset does the club have? And the amount of depreciation charge is not shown in the receipt and payment. Any liabilities that are outstanding at the year, so any outstanding liabilities are also not shown. So these are some of the problems that we could face if receipt and payment is used as the source of financial statement. So income and expenditure and financial statement is to be prepared to get a complete picture of the club. Calculation of final result for clubs and societies. In this type of question, you will be asked to calculate the surplus or deficit. In this type of organization, there is generally no ledger. So this is similar to what we studied in chapter 15 and chapter 22. Chapter 15 dealt with profit, calculation of profit using the net asset method. Profit 22 was related to incomplete records. It also dealt with calculation of profit or loss of cash-based business. And in those two topics, we had used this mnemonic code to solve our answer. C, closing capital, or you can say net assets, closing net assets. Here we'll be using the term closing accumulated fund. Less opening capital, or you can say opening net assets. Here we'll be using the term opening accumulated fund. So all the red markings are the terms we'll be using here. Return earning was used in our earlier classes. Here we'll not be using it. Drawings was added back in our previous topics. Here we'll not be using it. I put a cross here because normally the members are not allowed to draw cash for personal use from the club. Additional capital will be referred to as additional fund introduced here. So this has to be deducted here, and then you get profit for the year. That's referred to as surplus out here. Now additional funds introduced. Sometimes the club may receive a donation or a legacy that has to be treated as capital receipt. The extra injection of fund will increase the asset owned by the club at the end of the year. In turn, this will increase the figure we calculated as surplus. It could also reduce the figure calculated as deficit. If you are suffering from deficit, it could reduce the amount of deficit. Obviously, the amount of donation or legacy is not an increase in the net asset earned by the activities of the club, so it must be disregarded in our calculation. That's the reason why we deduct additional funds introduced. So let's look at an example from page 359 of the book. We'll be solving it using this code. So you have a question here where there is asset and liabilities at the opening date, that's 1 January 2014, and asset and liabilities at the year end is given here. So calculate surplus and deficit. So here what we do is, it's very simple. I'm going to show you the solution I was done. So basically you need to remember the accounting equation: assets equals to capital plus liabilities. So we are going to calculate the capital, that's your C out here. So to calculate a closing capital, what we do is we look at the closing data. That's at 31 December 2014. Nets is your asset out here. So there's 80 added up there, you can see up here 80. Then there's inventory of tennis ball, that's also your asset, you added 20. Inventory of fertilizers, that's your asset, you added. And bank balance is also asset 207, you add this. Now you are supposed to deduct liabilities, but there is no liabilities in the question, so your closing net asset is 355. In the similar manner, we go at the opening date. In the opening date, we have these assets, you add this asset up. 72 is your liabilities. You can look out here, you can pause the video and look at it. So where is 72? Here. Amount owed to the supplier of tennis ball $72. So owed means payable. So that's L. You deduct it. You get your opening capital, or I say opening net asset, or opening accumulated fund. So the difference of these two is 91. That's your surplus using this code. So basically here we don't have additional fund introduced, so A has not been used. That's a closing account fund, opening accumulated fund. You don't have A, and then the surplus is your 91. So we don't need to use this R and D in this topic. Preparation of financial statements of club. So to prepare the financial statements of the club, we need to follow simple 4 steps. Number 1 step is you need to prepare opening statement of a phase. Now this is done to calculate your opening accumulated fund. It's basically a statement of financial position at the beginning of the year. Number 2, we need to compile summarized receipt and payment and summarized bank account. This is normally given in a question, so it won't pose a problem. Number 3, you need to construct adjustment accounts. So this consumes a bit more time, and you need to spend some time solving this type of question, because this is the one which most students get stuck at. Then number 4, finally you prepare the financial statement. That is your income and expenditure and statement of financial position. Some key concepts before we begin. So additional activities. Many clubs organize activities that are not the core activity of the club. These activities are useful for raising additional fund and keeping members active. So besides the core activities, many clubs they conduct additional activities. The reason is to raise additional fund. Now why they do that is because subscription could be very low, or you could say subscription is insufficient to run the club. So to raise additional fund, they conduct additional activities. Keep members active. During off seasons, members could feel bored and lose interest in the club. So to keep them active, they need to conduct additional activities. So the question is, how should we prepare those additional activities undertaken in the club? How should we present those additional activities? Example, if a club is a snack bar, a cafe, that should prepare trading account, and its profit should be transferred to income and expenditure account. So if a club conducts an additional activity like opening a cafe, then he should prepare his trading account and transfer his profit to the income and expenditure account. That's the logic, and it's very simple. So if you look at this example from your book, it's in your book page, you can see page 360. You have this question where you need to prepare the trading account. So based on this data, you will be preparing the trading account as it is. Here you can see there's a revenue less cost of sales, and then you might have to find the missing figure. Like here the purchase is 14594, is not given in the question. You can pause the video and look at it. I'll not be going in detail about this. So this is your working the trade payable. You have the opening balance given up there. There is the closing balance here, credit side, and then payment is put in the debit side, and then the missing figure, this is your purchase. This is the purchase. So purchase has been derived as a missing figure, and then this amount has been put here to arrive at your cost of sales. And then you have the profit of the snack bar that has to be transferred to income and expenditure account. So the basic concept here is, if you have an extra activity being conducted beside the core activity of the club, you need to prepare trading account and transfer its profit to income and expenditure account. So dinner, dances, treasure hunts, family games, and etc. So this is also related to extra activities. So if there's any such kind of extra activities, again I'm repeating, prepare your trading account, find out your profit, surplus or deficit, and then transfer to the income and expenditure account. Now, why do they need to make this for every, you know, event? Every extra event is because it helps the members to decide in the future whether they should continue or not with the concerned activity. If it's profitable, they will continue. If it's not, they will stop. Sources of receipts of club. So what are the sources of receipts of a club? We can categorize the receipt into revenue receipt versus capital receipt. Here I'll be using the code as R and C. R for revenue, C for capital. So you see here there are seven headings for sources of receipts. The first one is subscription. So where is my key? So subscriptions are the amount received from the members of the club to maintain the membership. That's your receipt. That's your revenue receipt. You need to show it in the income and expenditure account. Now when I say revenue receipt, it goes in the income and expenditure account, and when I say capital receipt, it goes in the statement of financial position. So you need to be aware of that. Life membership fees. So this is subscription received in lump sum from members. It is your capital receipt. Entrance fees, admission fees received from the members. So any new members entering the club will have to pay the admission fees. That's your revenue receipt. Donations, if it's small, we treat it as revenue receipt. If it's big, you treat it as capital receipt. Legacy. Now legacy means money or property left to a club through will. So if anyone has left a money or property to the club through a will, that's your legacy and it's your capital receipt. Grants can be money or material received from the government or the public as financial assistance. So if it's for maintenance grant, you treat it as revenue receipt. If it's for development grant, you treat it as capital receipt. Other receipt could be proceed from sale of old newspapers, proceed from conducting games, interest on investment. So if the club has invested somewhere else and earned interest, that is also your revenue receipts. Adjustments. So here we are learning how to adjust subscription. So the focus of this point out here is subscription adjustment. This is something which you need to know. So I have extracted the question from a book and I will be focusing only on the subscription. And this is my marker. Okay. So let me mark with my highlighter first. So this is your receipt and payment account. If you read a question, the following receipt and payment account for the year ended 31 October 2014 has been prepared by the treasurer of the Dan Tong Gardening Club. So I'm going to highlight the subscription receipt here, 5040. So if you observe this receipt and payment statement, or you can say account, this in the left hand side is the receipt portion. This is all your receipt from, this is the opening bank balance. You have seats, sales receipts, subscription receipts, show entry fees, annual dinner dance ticket sales, equipment hire. These are the receipts. So total receipt is 8794. So you have a cash and bank balance of 8794. And then in the right hand side you have all reasons for payment. These are the reasons for payment. You have payments to seat supplier, purchase of garden equipment, meeting room rents, secretaries honorarium, speakers expenses, bank charges, advertising, insurances, postage and telephone, dinner dance expenses, and so on. And then at the end you have bank balance, bank and cash balance at the end of the year. So here the main focus is how to treat your subscription, so I will not be trying to explain all these terms. So you have subscription receipt of 5040. Now the question is, can we show this whole amount 5040 as income in the income and expenditure account? Well, that depends on your additional information. So let's have a look at the additional information. So that's your additional information here. I'm going to mark the subscription here as well. I'm going to highlight it. So you have subscription out here. Subscription paid in advance 135360. subscription receivable at the end of the financial year, you have 225 and 180. Now this is at the beginning of the year and this is at the end of the year. So now in such cases we need to make a subscription account. Let's make our subscription account now. So to make a subscription account, that's the subscription account out there. I'm going to show you step by step how to make it. So subscription is your income, remember that. So if you receive advance income, it becomes a liability. Advance income is a liability for us because you are taking income in advance, you are taking cash in advance while you have not given any service to the members. So if you look down here in the question, subscription paid in advance at the beginning of year 360 is your liability. So the liability comes on the credit side. Liability means credit. You have your 360 as your liability. Same way, at the end of the year, subscription received in advance, this is also our liability. So here what you need to do is, in the debit side you need to show it as balance sheet, and this will automatically come as BD in the credit side, which will ultimately become our liability. So this is how you present the two data, 360, 135. Next one, subscription owing at the financial year end. This is your subscription receivable. Receivable is our asset, so opening asset goes in the debit side. You have 180 here. The closing is also asset, but you'll have to show it first in the credit side by showing CD, and then it goes as BD at the beginning of next year. So it's still your asset, receivable. Now after that, what we do is you go up there and you see subscription received. When you receive subscription, cash increases or bank balance increases. So assuming that cash bank debit, subscription bill credit, so here it comes here cash 5040. So after doing this, now you add up the credit side total. If you add up total, it comes to 5625. Whatever is the credit side total, that total becomes in the debit side 5625, and then you find the balancing figure. That's your step 10. That is the amount you charge to income and expenditure account 5310. So this is the amount which you can show it. So this is your income and expenditure account. Under the heading of income, you show subscription as 5310, and in the statement of financial position, under the heading of current asset, subscription receivable 225, you need to show it as a current asset, and then 135 is the advance subscription received, that's your liability. You need to show it under the heading of current liabilities, advance subscription 135. That's how you prepare it. So more of subscription adjustment. So this can also be done through statement style. You don't need to it's not mandatory for you to make a subscription account unless question says so. So you can do it this way as well, in a simple statement style. So during the year you have received subscription of 540, you put it out here. Advance at beginning. So advance at beginning means you have received this advance in the previous year, which is for the current year, so you add it. It's the income of this year. Receivable at the end. So at the end of the current financial year, if there's any receivable, you are supposed to add it because it's the income of this concerned year. We are following the accrual concept. So when you add this, it comes to 5625. That's similar to your 5625, exactly same. Then less advance at the end of the year. So if you have received advance at the end of the year, it means you have received cash of the next year. So you need to subtract it. 5 is missing here. I put 5 here. Then receivable at the beginning. At the beginning of the year, if you have any receivable, it means it is the receivable of previous year. So previous year's amount should not be shown in the income, so we are deducting it. Assuming it is already received inside this 5040, we are deducting it because it is not the income of this year. So then when you solve this, you get 5310 as the amount which you can show as income in the income and expenditure account. So basically it's the same thing here, but you should not forget to present it in the statement of financial position. Remember that the receivable becomes an asset at the end of the year, 225, and then advance subscription at the end of the year becomes your liability. So the end data you need to put here if you make this statement. So this is also an alternative way of solving it. So this is another problem related to subscription. In practice, many clubs write off any subscriptions not paid by the end of the club's financial year. Since if a member has not paid this subscription by the end of the year, there is a strong likelihood that the membership has lapsed. If you are expected to take this line of action, this will be made clear in the question. So here is simply trying to say that if a member does not pay the subscription until the end of a year, normally it is assumed that he has left membership. So in that case, we are supposed to write it off, but you can do this only if the question mentioned so in the exam. So how to do such question? So this is a question. During the year ended 30 June 2014, cash received for subscription to the Dropkick Rugby Club amounted to $1,860. At 1 July 2013, subscriptions paid in advance amounted to $140. At 30 June 2014, subscriptions paid in advance were $80. At 30 June 2014, subscription totaling $60 remain unpaid. It is the club's policy to write off any subscription that remain unpaid at the financial year end. So this is the thing that we are looking for in the question, to write off any subscription that remain unpaid at the end of the year. So let's have a look at how it's done. Here's your subscription account. So let's start off. During the year ended 30 June 2014, cash received for subscription to Dropkick Rugby Club amounted to $160. That's your cash received. At 1st July 2013, that's your year start of the year. Subscription paid in advance amounted to $140. So at the start of the year, advance subscription is a liability. Comes in step 1, 140 current liabilities. At 30 June 2014, subscription paid in advance was $80. So that's also a liability, but we put in the credit side, and then that CD becomes PD. So ultimately it is still our liability. Subscription paid in advance. So then what we do is the total amount received here, 1,860, we put down here, cash 1,840. Then now we need to focus on the last part. Is the club policy to write off any subscription that remain unpaid? So subscription totaling 60 remain unpaid means we will not be receiving it. So we need to write this off. So here you will write income and expenditure statement and put 60 here, and then you total this up, it comes to 2060. Here also comes 2060, and then this up becomes your missing figure. The missing figure is shown in the income and expenditure statement 1980. So this is going to 1980 is going to be your income, and then 60 is going to be shown as an expense because it is not going to be recovered from the concerned member. So this is your income statement. Income, you will put under the income heading, you will put subscription 1980, and under the heading of less expenses you will have subscription written of 60 because this is not going to be recovered. Now in the statement of financial position, you just look at the closing balance. We have BD is 80, that's your current liabilities. So advance subscription, put 80, and that does it. Life membership. So this is a lump sum paid by a member. It entitles the member to use the club's facilities for the rest of his or her life without any further payment. Money received from the member is debited to bank account and credited to life membership phase. It means bank account debit, life membership fund account credit, because you are receiving, so bank balance is increasing, and then there's a liability created because you are receiving the cash in advance, and that's under the heading of life membership fund. It's in credit. The balance on the life membership fund is credited to income and expenditure amount in equal annual installment over a period that has been agreed by the club committee. The balance on the life membership fund is shown on the statement of financial position as a non-current liability. So it's very simple. If you receive a life membership fee, what you're supposed to do is a certain portion agreed by the members must be shown as an income in the income and expenditure account, and the balancing figure or the remaining amount should be shown in the statement of financial position under the heading of non-current liabilities. So let's have a look at an example to clarify it. The Old Jacks Bowling Club operates a life membership scheme. The life membership subscription is $350. Okay, $350 is the life membership subscription. Means if you pay $350, you are a member for life. The balance standing on the life membership fund at 30 September 2013 was 2940. So you have an opening balance. That is a great balance. During the year ended 30 September 2014, 5 members took out life membership paying $750. The club transfers 10% of the balance standing in the life membership fund at the end of financial year to the income and expenditure account required prepare life membership fund for the year ended 30 September 2014. So this is very simple. This is your life membership fund. So first thing, we had opening balance. So you're going to put the opening balance on the credit side. That's your step 1. You can see 2940. That's your step 1. Then we have received, we are the accountant of club, remember that. We have received life membership fees from 5 members. So 5 into 350 is step 1750, second step, bank on debit. We have received it. Then the question is saying to transfer 10% of the balance standing in the life. So if you add this to total, you come to 4690 both sides. So the 10% of this has to be transferred to your income and expenditure account as an income. So 10% of 4690, the 10% of 4690, remove 10 is your 469. That goes on the income and expenditure account. And then the missing figure, balance CD, goes as balance BD for the beginning of next year. So in conclusion, 469 here, the 469 is shown as income on the income and expenditure account, and 4221 is shown as non-current liability in the statement of financial position. So this is your income and expenditure account. Under the heading of income subscription, you put 469, and this is your statement of financial position. Under the heading of non-current liabilities, you put life membership fund, put this balancing figure 4221. That's how you solve it. Okay, thank you. We'll meet in next class. Let me know if you have any queries.